What is today's objective for Powell with this market? You're talking about front-loading rate cuts. Everybody else has come through here has said to me back half of the year. Why are you locking for the front half? Good morning.
Good morning, Manus. Manus, I'm going to tell you today is the best day ever for the Fed and Jay Powell to walk in and give a 30-second press conference. He should walk in, survey the room, and say, 6-month annualized rate of core personal consumption expenditures, 1.9%. 2% inflation target met. Look at unemployment. On Friday, we're going to have the 26th consecutive month of 4% or lower unemployment. Full employment, box ticked. And today, we got the employment cost index. It was up 0.9% on an annualized basis. That's 3.5%. That's the 2% inflation, 1.5% productivity gain. Box ticked there. Told you so. Take the mic, drop it, and walk off the floor. We're in a soft landing. They've done a brilliant job.
It's like you two playing in Las Vegas, isn't it? Drop the mic and walk off. Treasury yields dropped. A very short end of the curve, Bob. Look at this. 421. We are down 10 basis points. Now, part of this is to do with the quarterly refunding. Part of it's to do with the data. When you look at the quarterly refunding, what did you make of that?
I think it was pretty straightforward. I think the market is looking at the totality of everything and saying, if we're in a soft landing already and you still have rates at 5.25%, 5.5%, and full balance sheet runoff, then the risk is to the downside again. So the Fed can start cutting rates sooner than the market is anticipating. And then the Treasury didn't surprise with an enormous amount of quarterly refunding. It came in a little bit lighter. Mm-hmm. We were told that a couple days ago, and they came in true to form. The market's ready to absorb it.
Bob, if you're ready to have Powell drop the mic and have his Stardust moment, do you think they would cut by 25 basis points in March?
I don't think so, only because 2021, I think, is still very present to them, and they were a little bit slow to hike. They can't take the chance on being wrong on inflation again. So I think all things being equal, June still looks like the right date for them to have those discussions about cutting rates. But I think they have to start. They have to start telegraphing to the market that they're ready to cut rates. Because when you look back at 1995, which is the one soft landing everyone talks about, they cut rates 3 times during 1995. So they started to take pressure off the system. They can't leave rates where they are. They can't keep running down the balance sheet at the current pace. They need to start dialing those back. I don't know if it's May or June, but somewhere in there strikes me as the right time to begin.